I am very excited to welcome Mark Slade, the Director of the South Dakota Small Business Development Center, for our session on financial options for small businesses during COVID-19. In addition, we are happy to have Burl Kelton, the Public Affairs Specialist for SBA's Office of Disaster Assistance, on the call. He will be available during the question and answer session to answer any specific questions to them. So without further ado, I'm going to hand it off to Mark, and you can take it from here.
So the SBDC program, we have been receiving a tremendous amount of inquiries from our clients regarding what's available to them. You know, as an existing business, there's this ever-changing landscape, not only for you as a business owner, but just in terms of the financing programs that you may be able to tap into to help carry you through this uncertain time. So we wanted to present these different options so that everybody would be aware at least what the landscape looks like. And then we can work individually with entrepreneurs to help them through particular situations. Also, by having Burl from the SBA's Office of Disaster Assistance with us this afternoon, he may be able to answer any specific questions on the SBA programs. So with that, you know, what are the options that are out there? The longstanding program that's been in existence for longer than I've been doing this, and I've been with the SBDC going on 23 years now, is the Economic Injury Disaster Loan, or what you'll hear referred to as the EIDL program. Economic Injury Disaster Loans have been around for, that program's been around for a significant length of time and has been available for a variety of uses. The Paycheck Protection Program is a new program that was part of the CARES Act that was created in the Senate, passed by the House, and signed into law by the President about 3 weeks ago. That one has some very unique features, which we will review and talk about here in a bit. And then recently announced, the newest of the three is the South Dakota Small Business Relief Fund. There are a couple other things that you might be able to tap into, which we'll talk on briefly as well, primarily the SBA's Express Bridge Loan Program, as well as some debt relief provisions that were also contained within CARES Act. So looking at the EIDL program, the EIDL the program here, you know, these are funds that come directly from the Small Business Administration through an application that's done online. And that goes through a customized website that they built specifically to handle this. The disaster loan program, basically the office in California that's processing these requests, is handling everything west of the Mississippi River. And you can imagine with the widespread effect that COVID-19 is having on all types of businesses and all geographies, they had to improve infrastructure just to keep up with the overwhelming demand. So they created a website.
The meeting, sorry, be late.
So they created a program specifically, or a website specifically to handle the applicants for the EIDL program. Now, how much is a business eligible for? You know, the law says that a business can receive up to $2 million, but it is also based on the ability to repay. Obviously, in everybody's situation right now, you know, the ability to repay has been affected by, you know, reduced revenue, sometimes increased costs as they're implementing new technologies to try to maintain some level of activity within their business. And so what the SBA is typically looking at, the disaster loan processors are looking at, is the historical ability in past financials. As part of the application for the EIDL program, there's a form that you will fill out called a 4506T. And what that is, it's an authorization for the SBA to pull your company's tax returns directly from the IRS so that they can review your past tax returns and basically look at the cash flow. See not only what your expenses typically run in your business each year, but also see what the underlying ability to repay these loan funds would be, you know, once we all hope that post-COVID, our businesses return at close to normal as possible. One of the nice things about the EIDL program are the terms. The terms are 3.75% interest when you're a for-profit business and a 30-year amortization period. So basically, they're trying to loan that money out on as low of an interest rate as possible and as long of a repayment length as possible to keep the impact to a minimum. in regards to how it's going to affect your small business. By stretching that out, once your business is through COVID, once your business is able to start repaying, and there's a 12-month deferment on this, the impact hopefully on those additional dollars borrowed unexpectedly needed by the business should hopefully be to a minimum. As I mentioned, there is a 12-month deferment after those funds are dispersed. So last thing SBA wants to do is loan you the money to help you with your cash flow crunch right now, and then immediately turn around and ask you to start paying that back the next day. So you do have 12 months after receipt of the funds before you have to start making payments back. Now, when can I apply? The opening date on this EIDL declaration is through the end of the calendar year. You can also apply now, be approved, and should this drag out beyond expectations, there is the opportunity to work with your disaster loan officer, to look at basically adjustments to your EIDL award. These funds are primarily intended to be used for specific costs, payroll, normal business expenses, accounts payable, basically things that, because of the disaster's impact, because of reduced revenues, you're just having a tough time covering. What can't you use it for? Refinance, paying off other existing term debt. It's not what this is really intended to be used for. Or going out and just buying additional normal equipment, perhaps, that you were going to use as part of an expansion. Now, if it was something specific to overcoming technology challenges, with regards to employees working from home, that might be permissible. But as far as paying off debts, starting a business, I've had a few emails of people asking, well, can I use these funds to start my business? No. These are intended to help existing businesses, be sustained through this unexpected crisis. Was talking with Burl earlier today, and one of the things that came up was, this sort of phase one of this EIDL program. Up to $500,000, or basically about up to 6 months worth of your operating expenses, is kind of this first phase. And then they also have a provision which is unique to the COVID-19, in that the EIDL advance was contained within the CARES Act, where they can advance up to $10,000 as part of your application. These funds are intended for payroll, rent, mortgage payments, and even if your ultimate application is rejected, maybe due to lack of cash flow, maybe a credit score is quite a bit weaker than it needs to be, there's the potential that this $10,000 is actually then turned into a forgiven amount. Here is the SBA's webpage. Of course, with any type of situation like this, we are always prone as a society to people out there trying to scam individuals and small businesses. So I did want to share a screenshot of what the SBA's EIDL application page looks like, so hopefully you can ensure that you are in the right location. And I will say, it's this new streamlined process that they have introduced as part of COVID is fairly quick and easy. I went through it hypothetically, just entering in information as though I was a small business owner. And to get to that fourth bullet point there, the additional information as you transition through those five circles, I was to the end of the fourth circle within 10 minutes time. So it's not an overly rigorous application process that's going to require you tremendous amounts of time. Again, with that 4506T form, the SBA is going to be able to access your historical financial information, which is going to save you the time and effort of otherwise having to go track all that stuff down, scan it into an electronic format, and somehow get it out to them. So then we have this new program, the Paycheck Protection Program, or what's being sort of nicknamed the PPP. This is a program that was introduced as part of the CARES Act. And the PPP program, in some regards, is a little bit more like the traditional SBA loan. As business owners, a lot of times you'll hear talked about, an SBA loan to start my business, an SBA loan to buy a business, an SBA loan perhaps to expand my business. And those traditionally are bank loans that the bank in turn, because of some kind of concern, could be collateral, could be the first time you've ever owned a business, it's not uncommon for the bank to turn over your loan request to the SBA and say, SBA, can you insure this loan so that we, the bank, can loan our money on as favorable terms as possible and say yes to this deal. The PPP program is somewhat similar in that this is also a loan that goes through your lender. Certified lenders and credit unions can work with the SBA on your application. What does make it a little different in one regard is the amount that's insured by the SBA. Traditional SBA loans can be insured, or the fancy word guaranteed, anywhere from 50% up to 85% on a relatively small loan, which means that your lender always has something at risk in the deal. And as such, they're allowed to charge a reasonable interest rate, 6 to 7% in the economy as of late. With this PPP program, the loans are actually 100% insured by the SBA. So basically, the SBA is taking the risk out of it for the lender. You do apply directly through your lender, and the calculation for what you might be eligible for, basically they look at 2 months worth of payroll plus 25%, capped at not more than $10 million. Of course, small businesses in and around South Dakota are generally not going to have the payroll where they're going to get anywhere close to that cap. But if you're looking at basically the equivalent of roughly 10 weeks worth of payroll, that's what the eligibility is going to be for. Now, one thing that has come up in conversation with a lot of entrepreneurs is they've asked, well, what about my independent contractors? What about these people that aren't on my payroll directly as W-2 employees, but rather are 1099 independent contractors? The SBA's, this PPP program that was put into place by the CARES Act, those 1099 contractors are basically treated as their own small businesses, and they are eligible to apply themselves directly for the PPP program. And their application window starts tomorrow. The program, the PPP applications opened up last Friday to small businesses in general. The independent contractors, the 1099s, can start applying as of tomorrow, the 10th. So when you're filling out your application, which we'll take a peek at here in a second, the application form asks you to document what your employment levels are, both in terms of number of employees as well as total payroll. And that's going to be used to kind of establish the baseline for your business's number of employees before COVID. And then there's going to be reporting after the funds are expended regards to what you've been able to sustain for employment through the next 8 weeks after receiving the money. And that's important to make sure you document it accurately. The interest rate on this program is 1%. There was some stuff floating around that it was 0.5%. It's actually 1% and a 2-year amortization, but I do put a bit of an asterisk to that. While it's the Treasury set it up on a 2-year amortization, there is an interesting facet to this PPP program that we'll talk about. The repayment begins a little bit quicker than your EIDL loans. The Paycheck or Payroll Protection Program does start 6 months after disbursement. And you can apply now until June 30th, or tomorrow if you're a 1099 through June 30th of this year. A little shorter window. The intent of this program, in its name, Paycheck Protection Program, is to try to keep your employees on board, trying to minimize the effect overall on the economy and not have, to whatever degree small business owners can manage, not have this wave of unemployment that then cascades down through less household income, which then means less sales to businesses, which means more unemployment, and it just becomes a vicious circle. So the real intent of this program is to keep your staff on board. So what they want to see the money used for primarily is payroll. But there is also eligible insurance, rent or mortgage payments, and utilities that can be used as part of the expenditure. What can't you use it for? Again, I recommend that you stick to the CAN list, because what is very unique and very attractive about the Paycheck Protection Program is it is potentially a forgivable loan. As a small business, if we use those funds that we are loaned from our bank with the blessing of the SBA, If we use that to maintain over the next 8 weeks our payroll, yeah, as well as eligible costs like the interest payments on those mortgages or rents, the utility costs that were mentioned, if we're able to maintain that for the 8-week period following, they will use that in calculating how much of that PPP loan is forgivable, which again, you get back to, it's a 1% loan with a 2-year amortization. That would be on any portion that's not forgiven if you used it for purposes outside of the eligible uses, or perhaps you still you used it primarily for those purposes, but just due to reduced revenue, you scaled your payroll back. You weren't able to maintain 100% of your pre-COVID payroll. There will be a calculation based on your before COVID and 8 weeks following receipt of money to basically look at how much of those payroll dollars were you able to maintain. That then gets applied in formula to how much of this loan may be forgiven. One careful thing, when the PPP program was first announced, it sounded as though you would not, as a small business, be able to apply for both an EIDL loan, the long-standing program, and this brand new PPP program through the CARES Act. It does sound like now they can both be applied for, but you do want to be careful that as part of that application and part of the implementation, that you are using those for distinctly different purposes. You wouldn't be able to use them both as far as like for payroll. Yeah, that would be viewed as double dipping. Here is a screenshot, and I apologize, I realize it's going to be a little small for some to read, especially if you might be on a mobile phone. In this PowerPoint, I'll note as well, will be saved along with the recording, and it'll be saved up to the same website that you registered at. So you'll be able to download and look at these screenshots later if you want to. You can also find this information online or directly through your lender. But I wanted to give you a quick screenshot so that you could see it's, again, a pretty simple application process for this program as well. You will see kind of in that first section, right after the information, the contact section where business name, phone number, email, etc. Well, here's where we capture that historical payroll information to use as a baseline. Also, what the purpose of the loan is. Again, not wanting to double dip and say we're going to use both EIDL and paycheck loan, both for payroll. There's a bunch of yes/no questions in there, kind of the am I a good person questions. And then there's some self-certifications on the back page that discuss, that you're basically aware of this program and how many employees you had and so forth. So it's not an overwhelmingly difficult application, partially because, the lenders and the SBA have to process this flood of applications that they are receiving. So here's one that is a little different from the two we've discussed so far. It's the South Dakota Business Relief Fund. This is a brand new program. I think it came out about a week ago or was announced a week ago. And this comes through the state of South Dakota, specifically the Governor's Office of Economic Development. Basically what they did was they carved off some dollars from other long-standing loan programs that they had in existence and created a new fund. I think it's capitalized at about $11 million, with which they can make loans to small businesses across the state, again, in an effort to help maintain the viability to otherwise good, solid businesses that are just overwhelmed with the current economic climate. You do apply directly through the Governor's Office of Economic Development's website, and that's at sdreadytowork.com. And then if you want to go directly, you can go to that /COVID-19. The dollar ranges are from $5,000 to $75,000. The one thing to note is with $11 million in that fund, at least initially, $75,000, if everyone was approved for that full amount, doesn't go a long ways. It basically would be less than 150 approvals that they could make out of that fund. If it ends up being a lesser amount, 35, 40,000, obviously it'd be roughly double that amount of businesses that would be able to receive those loans. So if it is something that you're interested in, if you've got a good viable business, it may be something to look at sooner than later. Repayment terms on this, again, it is a loan, and it's done at 0% interest with a 5-year amortization. So while the interest rate is obviously much cheaper than the EIDL loan program, The repayment is over 5 years as opposed to 30 years on the EIDL loan. What that means is on the state's loan program, for every $1,000 you borrow, basically you're going to be looking at a loan payment of about $17 per thousand each month. Like the PPP program, it's 6 months after disbursement that your repayment will kick off. You can apply now, and they're fairly, from the information on the website and their application, they're fairly flexible for how you can use those funds. You can use those for any normal business operating expenses. Basically, the only limiting factor that they outright say is it can't be disbursements or distributions to owners. It has to go to employee payroll, rents, utilities, business costs. Other information, they do want the business owner to set up a separate bank account specifically for these funds, into which you deposit this loan and then make the payments out of. They do stipulate that there will be quote unquote regular expenditure reporting to GOED on how the funds were used, though it doesn't specify what that will look like, if it'll be quarterly, monthly, annually. I'm sure as part of the rules making, they will get that finalized. And any owner who owns 20% or more of the business will need to provide a personal guarantee. That's not unlike the typical SBA business loan. Generally anybody who is a significant owner of a business will need to personally guarantee the loan. That says if my company cannot pay this back, I personally will do out of my own personal assets whatever I can to make good on this loan. Here's a screenshot of the first 2 pages of the GOED business relief application. There are 5 pages in total. They all kind of look fairly similar. So you can see it's pretty straightforward information. Information about you as the applicant, how much you're requesting, what type of industry you're in, who are the owners, how your business has been affected, and so on. Now, other programs that are out there that you may look at, these first 3 that we've talked about, the EIDL loan, the long-standing disaster loan program that SBA has had around for decades, the Paycheck Protection Program, the one that was created as part of the CARES Act and just kicked off here a couple weeks ago, and then the state's brand new loan program. Those are the 3 largest programs that we're likely to see, but there are some other options as well to touch on. The SBA has what they call an express bridge loan, and this, like other typical SBA loans, would be done through your lender. They're smaller loans under $25,000. You do negotiate the interest rate with your lender, but the SBA does cap what the bank is allowed to charge at not more than prime plus 3 1/4. Now, prime right now is at 3 1/4 as of the middle of March. So your lender could charge you as much as 6.5% or as low of a rate as they felt they could. And it does have up to a 7-year amortization. Now, applications will need to be done here within the next, roughly 5-6 months. But you can use it for working capital, and you can also use it to reopen a business. I was talking with an individual earlier today via email whose business is primarily closed down because of the effects of COVID. Also contained within CARES Act was an SBA business debt relief. And this one, as opposed to the other ones that you have to apply for, these ones should be automatically kicked in. So if you have an outstanding SBA 7A loan, which again is that typical SBA loan that you hear about to start, grow, and buy businesses. If you have a 504 loan through the SBA, which is actually a program fairly specific to real estate and long-term equipment, or if you have an SBA microloan through somebody such as Grow, South Dakota, up in the Aberdeen-Sisseton area, that covers a statewide lending through the SBA microloan. These payments should be automatically covered. And the SBA is looking at providing or covering 6 months worth of your principal and interest on these loans so that your business can survive or possibly get reopened. So I've had entrepreneurs and clients of mine from the past reach out to me and say, hey, which one of these programs is the right one for me? I tell them, it's really unique to your business. It's unique to your business, unique to your situation, but really investigate all of them, and you can potentially apply for more, and you're not required to take the funds, even if provided. EIDL program, if they come back and say, based on your level of expenses and your ability to repay, we're going to provide a direct loan of up to $200,000. You could elect to take the entire $200,000. You could elect to take none of it. Maybe you feel like $100,000 at this time would be sufficient to carry you through. You're not obligated to take that full amount. But things you should be looking at are things like, how many employees do I have? Well, to a large degree, that's going to drive how many dollars I'm going to be eligible for, specifically through the Paycheck Protection Program. Can I keep them all on? One fear is if I don't keep my payroll up, if I don't keep at least a significant amount of my payroll, and I do go through the Paycheck Protection Program, if I end up laying off or reducing hours to the point where a significant amount of my wages are no longer being expensed over the 8 weeks following my PPP funds, I'm going to, instead of having a loan that's entirely or at least largely forgiven, that will convert into that 2-year term loan. And while it's only 1% interest, repaying it over 24 months could be, somewhat significant. So if you are looking at the likelihood of at least keeping a significant amount of your staff on board, the PPP program may be very attractive. If you think that you're going to significantly be reducing wages because of down revenue or even a closed business and not able to keep payroll on at all, it may make the EIDL program or the state's loan program a more attractive option. The overhead goes into the calculation of programs like the EIDL. And 2, how much do I qualify for? So I threw together a couple little examples, just hypothetical examples. One of an accounting firm with $500,000 a year in revenue, expenses very heavily in the wage area, most typically in a white collar business such as this. Some of your largest expenses are going to be your people, but a nice office with fairly, a significant amount of rent, and then just other miscellaneous expenses for training and education, software, et cetera, marketing, and some profit left over. So looking at the EIDL program, if we look at, let's say, those wages and rent, $300,000 in wages, $60,000 in rent, and if we look at an EIDL application for 6 months worth of that, be a loan of up to $230,000, which at 3.75% interest for 30 years, about $1,000 a month, about $12,000, almost $13,000 a year in new debt service that we'll have to start paying back 12 months after we receive the funds. Well, with our $40,000 a year in typical profit, we can absorb that $13,000 a year in new debt. Yes, it'll make us less profitable, but we'll be able to keep our good employees. We'll be able to sustain our business through this downturn. Now, we could look at, possibly instead, pursuing the PPP program, where we look at that $300,000 in wages, $25,000 a month, and when we look at 2.5 months worth, that's roughly $62,500 that is perhaps going to be forgiven, assuming that we maintain that staffing level. So I would have, the possibility, do I go for the larger loan that I have to repay, the smaller amount that very likely will be forgivable if I use it for its intended purposes? Perhaps I go with a blend. What I could do is I could look at my payroll through specifically the PPP program and take that $62,500 and then do the EIDL to help cover, the rent, the normal business costs, which then would give me access to a lesser amount than the full $230,000, but more than just the $62,500, with a good chunk of it being forgiven. Convenience store, kind of the other end of the spectrum. Convenience stores have a fair amount of expenses, but actually fairly low wages, or fairly low amount of their expenses going into wages. So in this example, we've got one, let's say it was marginally profitable. They only were generating $5,000 a year in profit after all these expenses were covered. Surprisingly thin margins in fuel. If they looked at the expenses, if SBA looked at those 6 months worth of expenses and said, okay, well, that's $160,000. If we loan it out to you at 3.75% for 30 years, well, that's almost $9,000 a year in new debt service. But wait a minute, your business has only historically shown $5,000 in profit. So how are you going to be able to absorb that? They may have to scale back the loan approval to a lesser amount that your business shows that it historically could absorb. So they might only be able to offer the business roughly $90,000. Or we could pursue the PPP program specific to the wages that's only going to provide us $25,000 based on $10,000 a month in payroll. Again, possibly I can break that up. I can look at a loan to cover some of my business expenses and as large as my business can afford, and at the same time, that PPP program to help cover the wages. Here's a table, and I realize this is going to be very difficult probably to read, but with this document, it will be up on the website, again, as a PDF download. So if you go to the registration page, a lot of the stuff we just walked through, this is just kind of a side-by-side comparison of each. It's helpful to be able to kind of lay these out side by side to see which one do you feel like might be the best fit for your unique situation. Now, as was mentioned by Jennifer, this is the first of 8 presentations that will be ongoing over the next 4 weeks through the USD Beacom School of Business. Next Tuesday, we will have Matt Hurd discussing how to manage cash flow during the crisis. But then we'll have different things that you don't typically think about. Things like managing stress, supply chain risk. Businesses now are kind of facing, the uncertainty of, can I still get product? Most time business owners are afraid, can I sell my product? Can I find enough customers to buy what I'm selling? Now they're also starting to look at, or maybe they hadn't previously, starting to look at things like, well, can I source product? Or is the business that I typically have received my raw materials or finished goods, are they struggling or going out of business? So there's a wide variety of topics that will be coming up over the next 8 weeks, all of which should be free. I think there's one that there may be a slight cost for on April 28th, but this information will all be through that same registration page. My contact information is located here, our website, SD Business Help. We do have 11 consultants throughout our 7 offices statewide. You can plug in your county and find out who the consultant or consultants are that typically would work on projects in your county. I will say all of our staff are working remotely throughout the COVID crisis. Our offices are not open to the public, just in an effort to contain things. But email is generally going to be the easiest way to reach our staff. So with that, I think we can open it up to some questions, and I can attempt to answer questions that you might have. And then if Burl Kelton is available from the SBA's Office of Disaster Assistance, he can also help. And any questions that we can't answer or that we run out of time for, we can compile as a list and post the answers to that and upload it to the same website where you registered and where this PowerPoint and presentation will be located.
All right, thank you so much, Mark. That was great. Lots of great information, and there were a lot of great questions coming through on the chat. I know Burl was answering some as they went, but I'll tee it up with a handful of questions, and then I've also switched it so that participants are able to unmute themselves if anyone wants to ask the question directly. But to get us started, lots and lots of questions about people who have already submitted their application for the EIDL, and they are wondering where they can check on the status of the application because they haven't heard anything. Do you or Burl have a good answer for that?
Well, that's a tough question. Processing is going forward as we speak, and responses are being made typically by email. So otherwise we've seen people receive their money before they receive their notice of receiving their money. So it is delayed. Folks that are responding are really slammed, and I apologize for that, but we are trying to get the word out as soon as we can. It's basically first come, first serve as far as processing. So that's part of it. And we really ask people to be patient, and we'll get them the word as soon as we can. But it is slow right now. I apologize.
Yeah, and I would agree with Burl. Again, Mark here. They're doing yeoman's work out there trying to dig through the pile. They're basically handling every request coming from the Western United States through an office that at the same time they're dealing with, COVID-19 situations in California, and, people that are working from home, and people that, it's not an easy situation to scale up for. The last time I recall the Economic Injury Disaster Loan Program utilized for any significant purpose was in 9/11, right, going on 20 years ago almost. It's a tough thing to plan for and to staff for, all of a sudden going from a 0 to 100, with in a relatively short period of time. So we do appreciate, both the SBA's effort as well as, understanding that the small businesses are anxious just because they're dealing, with upcoming pending payrolls and rent. So it's not an easy situation for anyone involved.
And then a couple, I think you touched on this a little bit, Mark, but if you could circle back, people are wondering if applying for EIDL prior to PPP will hurt them in the long run, and kind of how those two loans are working together.
Yeah, I would say that the biggest thing is to make sure that the application purposes specified, that they're going to be used for different purposes. And another thing that did come up was, as part of the streamlining not only of the EIDL applications, but also kind of later stage when the CARES Act was authorized into law, it had that up to $10,000, advance, basically grant. The original applications that came in, I believe, before March 29th, didn't have a checkbox because it didn't exist before that legislation was signed into law. So I believe the disaster office was recommending that folks that may have had applications in prior to the 29th of March would go back in and actually reapply if they were pursuing that advanced request. And Burl, you may have additional to add to that.
I would second that. The early applications were more complicated and did not include that offer of the advance. So I guess it's been 2 weeks now. If you applied in that time frame, it would be to your advantage to go back onto the EIDL site and reapply. There are fewer requirements. It's more streamlined, and it might help get get it out the door.
All right, and then we have a couple of questions related to independent contractors or sole proprietors. Mark, you mentioned that those applications start tomorrow. So if they previously applied, what's your recommendation?
Yeah, for the PPP program, the applications go into effect tomorrow. And again, those would be the applications that they would do with their local bank, typically the bank that they have a long-standing relationship with. So those would go through them. The other thing that is a little unique about this situation is, most traditionally owners in sole proprietor businesses and owners in LLCs that elect to file as sole proprietors or partnerships historically have not been deemed to be employees. And so anytime an application, anytime a financial report discussed number of employees, for those businesses, they would not include themselves because they were not issued a W-2 like their paid staff was. They would just take a draw or a distribution out of the cash flow weekly, monthly, or however often that they felt they needed to. That doesn't show up anywhere on their tax returns as a sole proprietorship Schedule C filing. What I did like about the language in the PPP program is it recognized the fact that these, sole proprietorship businesses, partnership businesses, and LLCs that file as a sole proprietorship, their compensation is as necessary as their employees. And so in an effort to also make sure that those owner operators were accounted for within the payroll of their business, that's where they're tapping into prior year's tax returns and looking at what amount of profit was in the business and almost equivalating the profit of the business historically as the W-2 of the owner. If you're a corporation, you actually pay yourself first and foremost through a formal paycheck as the owner, and would receive a W-2 that you would claim personally. So that one is very clear and straightforward. It's those LLCs that file as sole proprietors or sole proprietorships themselves where there is no formal W-2. So I was thankful to see that these programs basically widened their approach to recognize the importance of the owner as well as the paid employees.
And how does that apply to agricultural operations, Mark?
Ag businesses, and Burl, correct me if I'm wrong, but I don't believe ag production businesses are eligible for these SBA programs. And as best of my knowledge, I was nosing around the USDA and rural development websites trying to see if they had anything that came out of the CARES Act, and I was unable to find anything. I had a rancher reach out to me from Western South Dakota. They did have a number of different business components. They weren't just purely ag, and a couple of their other components would probably qualify as service and other types of businesses that were not directly, they're tied to ag, but they weren't ag production. So that farmer who also maybe does welding, if he's filing a Schedule C on the welding business separate from his ag, that separate Schedule C welding shop, if they're seeing declining revenues and so forth, might be eligible, whereas, raising cattle, growing corn, wheat, so forth, typically isn't qualifying.
So yeah, that's right. With the EIDL, the program as it stands right now is for ag-related businesses, but not ag production businesses. However, there's a lot of discussion going on in Congress about phase 4, I guess it is, and some changes related to that. Don't know what they're going to come out with, but as it stands right now, only ag-related businesses that are not in the ag production are eligible to apply.
Yeah. So if you're a farm implement dealer, if you're a feed and seed shop, if you're a mobile mechanic that goes out to the field to fix the tractor, those would qualify. It would just be the direct, the direct ag production businesses that would not currently qualify. But as Burl mentioned, it's a moving target. Congress is discussing. I know there's been discussions already about a phase 4, which to some degree may add more dollars into the pot. In the event that programs like the PPP program run out of the authorized dollars that were allocated in the CARES Act, they may have to replenish the dollars, so to speak, which would come through an additional meeting of Congress. But they could also look at broadening or narrowing certain programs. So definitely stay tuned.
It's really
excellent.
Interesting.
And we have one of the participants. Oh, sorry, Burl, were you finishing up?
I was just going to say, it's really interesting how quickly the word is getting up to Congress and the agency in this particular disaster event. We've seen significant changes, sometimes in less than 24 hours in reaction or in response to issues that are brought up to bear. Just a side note.
Excellent. Rick Huber wanted to ask a question directly, and Rick, you're unmuted. Go ahead.
Thank you. I've got a business that is probably not the normal business. I do home inspections, and I am the sole owner of an LLC. Here's my problem. Throughout the year, the business grosses about $53,000 to $54,000. Expenses are somewhere in a $20,000 range. Right now, and it's documented since I've owned the business, March, April, and May are my busiest months. And that amount of money is what I'm missing right now. But the problem is this. If you average out my year and you say, well, you're allocated for, say, $1,200 a month. No. The approximately $7,000 a month that I make in these 3 months gets me through the slower months when there aren't very many home inspections. So what do I do in that situation? I mean, I can go get a loan, but the 10,000, I need $21,000 just to make up for these 3 months. Does that make sense?
Yeah, so with this, Mark, with a seasonal business like yours, I know there are some provisions within the payroll calculation of the PPP program with regards to seasonal businesses, where when they do their look back as far as what do you establish as the true baseline of payroll, or in this case, the owner's lost payroll, that I think they can slant that somewhat. There's some definitions in there as far as what time frame. And then with the economic injury disaster loan, Burl, I believe when he can discuss that with his EIDL disaster loan officer that's assigned to him to look at what can be done to adjust for the seasonality of his business. Is that correct?
That's correct. The loan officer will discuss what the current need is and what the, sometimes we go back 3 years to look at the seasonal. If you have at least 1 year showing the seasonal, then we take that into account. We also take into account what you need in terms of the current operating expenses. You may have equipment that has a monthly payment, something like that. So we're going to take into account not only the ongoing monthly, but also your seasonal income and make adjustments with you on that.
Thank you.
Okay, Wade Hofert had a question. I just took that from you.
I'm probably going to be about the same as like Mr. Huber was. I run a table and chair rental business, and obviously right now that's completely closed down because nothing's open, nothing's doing anything. And anyways, my question is I still have incurring loans that I have basically been utilizing my profits from the last 3 years to keep me afloat. Well, that well is drying up. So now my concern is I've talked to my bank, and yeah, I can apply for loan assistance and all that, but me adding another loan to my current loan isn't going to help me get out of this situation. It's actually going to hinder me and put me deeper in a hole. So I guess that's where I was kind of like listening with that Mr. Huber, and maybe I can qualify under the PPL Act and look at finding assistance that direction.
One of the benefits of the EIDL program is that your first payment, the actual debt that you incur, isn't until 12 months after the note is signed, and the interest doesn't begin until funds begin to be dispersed. So you could likely be, and not only that, we look at the start date of the event as it was declared, which was January 31st. So since January 31st, if you had expenses or losses, as it were, that funds that are needed to keep the business operating, we can look at that as a loss toward included in the loan, and then forecasting out at least 6 months on those operating expenses. It doesn't include profit or anything like that, but if you're paying yourself out of that income, and that can be a part of the loan, which doesn't incur its first payment until the 12th month after you sign the note, which might be a help in this case.
Yeah, I just need assistance to get through. I mean, it's just to help me cover loan expenses. I'm not looking for the profit side of it. So,
and if any of those loans are SBA loans, of course, you could look at that 6 month SBA stepping in to cover that debt relief.
Okay. Thank you very much. Appreciate it.
Well, if I could add just a couple more things too. If you have current SBA loans, those payments are being deferred automatically. Same with the disaster. If you had a disaster loan from a previous unrelated disaster, those payments are being deferred.
Thank you.
Thanks, Burl. Mark, can you touch on if they applied for EIDL, can they also apply for the South Dakota Business Relief Funds?
No, I think they would, again, want to be careful that they are not using the two different loan programs for the same costs, same expenses. The the SBA programs generally say where assistance is not elsewhere available. And they do stay right on the South Dakota loan program that they cannot, make claims to how this might or might not affect any SBA application. So I think, again, the biggest thing will be making sure that you would use the two different loan programs for two different purposes. And where payroll is a part of it, the PPP program, if you can maintain payroll, definitely has the attractive nature of being potentially forgiven. Whereas some of your other overhead costs, supplier costs, or so forth, and normal business expenses, you might look at either EIDL and or the South Dakota business relief loan.
Excellent. Mark, we've got a number of questions here, and I'm just going to throw this at you. Several specific questions to particular businesses. And so I just wanted to say that since we're running up on time here, we will definitely get back to everyone. But can you kind of recommend, if it's a general question, should they reach out to you? When should they reach out to their SBA advisor? And kind of who is a great person for these different programs to reach out to?
Yeah, I would say, they can definitely reach out to our staff across the state. We do, like I mentioned, we do have 11 positions covering the 7 different offices statewide. So we can help divide and conquer and field their questions. Some of the generalized questions we can compile in a list and post to the website so that's accessible to everybody. But if they have something that's very unique and specific to their business, definitely reach out to our staff. And if we don't know the answer, sometimes we'll forward those up to Burl and his crew and then relay answers back. We try to preserve their time as much as possible because we realize they have the overwhelming task of getting through all the applicants that are coming through. So we try to handle as much of that for them as we can, but if it's outside of our knowledge, we'll forward it up and see what we can find out.
Excellent. Burl, you just mentioned the loan deferral for the SBA loans and the other disaster loans. Do you know how long that's being deferred for?
I believe it's through the year. I'd have to check, but I believe it's for the year.
All right, excellent. Well, thank you so much. As we said, a ton of great questions on here. We will circle back and work on getting answers back to everybody and just kind of compiling a list of general questions. And those will be posted to the website. Everyone should have pre-registered, so we'll have your email. So we'll send out an email to everyone once we've got the PowerPoint and questions posted up on the website. It is a holiday weekend, so it might take a little bit longer, but we're going to try and rush that as quickly as possible. A reminder that our next session is on Tuesday, and that is about cash flow options for small businesses at this time. So definitely will be relevant to a lot of these considerations that you have right now as well. And I believe Mark is going to also be on the line if there's any specific Q&A for him. And that one is going to be with Matt Hurd, who's one of the faculty members here at the USD Beacom School of Business. And once again, you can look at the whole platter of webinar options that we have at our website. And we want to thank you so much for being here. Thank you, Mark, and thank you, Burl. Great answers and a lot of good information.
Yes, thank you, Jeff.
Thank you. Glad to help.
All right. Thank you, everyone.